The impossible just happened. While you were sleeping, the silver market didn't just dip, it was executed. In a single 24-hour trading window, the paper price of silver was vaporized, dropping a staggering 37%. This is not a market correction. This is not a sell-off. This is the single biggest act of financial terrorism and market manipulation in human history. What I am about to show you is the digital crime scene left behind by the bullion banks. As of today, January 31st, 2026, the global financial system has officially broken. The link between the price on your screen and the metal in your vault has been severed. If you are looking at the spot price right now and feeling panic, that is exactly what they want. They are hunting your stops. They are hunting your physical ounces, and they are doing it with the blessing of the regulators. In this emergency investigation, we are going to look at the algorithm glitch that triggered the slide, the secret dark pool transactions that happened seconds before the crash, and why this 37% drop is the final desperate act of a banking system that has run out of physical silver to deliver. To understand the scale of this crime, look at the volume. In one day, the amount of paper silver traded on the COMEX exceeded 3 times the annual global mine production. How can 300% of the world's yearly supply be sold in 24 hours? It can't. Not unless it's naked shorting on a level that would make 1980 look like a minor glitch. This was a coordinated dump by 5 major institutions to prevent a total exchange default that was scheduled for next week's delivery window. The banks were cornered. With the BRICS nations demanding physical delivery and the industrial AI sector vacuuming up every ounce of registered silver, the banks had 2 choices: declare bankruptcy or crash the price to force retail investors to sell. They chose the latter. This 37% crash was a liquidity raid designed to shake the metal out of your hands and into theirs at a massive discount. The 1% are not panicking. In fact, they are the ones who triggered the sell-off. While the paper price crashed 37%, have you tried to buy a physical silver eagle today? The physical premium has exploded. In many jurisdictions, the actual price to get silver in your hand has barely moved, or in some cases, it has gone up. This is a total decoupling. The market is now 2 different worlds: the paper illusion for the masses and the physical reality for the elite. This investigation is for educational and investigative purposes only. Market volatility in early 2026 is at extreme levels. This is not financial advice. It is a critical analysis of the breakdown between derivative markets and physical assets. Why the number 37%? Because that was the exact threshold needed to trigger the margin calls for thousands of leveraged traders. By pushing the price down this far, the banks forced a liquidation cascade. The computers took over, selling more and more paper in a feedback loop that the banks then used to cover their own massive short positions. They literally manufactured a crash to pay off their own debts with your losses. Leaked communications from the Exchange Stabilization Fund suggest that this was a controlled demolition. The goal was to protect the US dollar. If silver had been allowed to continue its moonshot past $50 and on $100, it would have signaled a total loss of confidence in the fiat currency. They had to kill the messenger to save the dollar. But here is the backfire. This manipulation was too big. It was too obvious. Central banks in the East are already responding. We are seeing reports of massive buy orders coming out of the Shanghai Gold Exchange at the discount prices. They are taking the bank's bait and draining the last of the Western vaults. This 37% crash is the final opportunity to secure physical metal before the exchanges are forced to close their doors for good. History shows that after every major manipulation, the snapback is even more violent. When the 1976 gold manipulation ended, the price quadrupled. When the 2020 silver smash ended, it doubled in weeks. The 37% crash of 2026 is the spring being compressed to its limit. When it snaps back, there won't be a spot price anymore. There will only be available or unavailable. The exit is being flooded with paper to keep you from reaching the door. Don't look at the red numbers on the screen. Look at the empty shelves at the bullion dealers. The dump is the lie. The shortage is the truth. The banks are desperate. The system is broken, and the real price discovery is about to begin. The question isn't why silver crashed. The question is, are you brave enough to buy the very metal the banks are trying to scare you away from? The 1% are buying the dip they created. What are you doing? Stay focused. Stay physical. The crash is the signal that the end game is here.